everybody, welcome once again on your own channel Krishna Singhdev. I am your mentor and your teacher Krishna. Today we are meeting here for class 11 student and the chapter which we are doing is equation, accounting equation. We have already finished some of the important concepts regarding accounting equation, and today's class we are going to learn something very important and very interesting also, that is outstanding and prepaid expenses. Yes, in today's class we are going to cover these two topics: how to take care of outstanding and prepaid expenses while making accounting equations. So do not leave the video in between, stay connected till the end because today's video is going to be very important. So let us understand the meaning of outstanding expenses first and prepaid expenses. So first I am going to deal with outstanding expenses. So what is the meaning of outstanding expense? Outstanding expense is an expense which has incurred, means the liability to pay this expense has already been generated, but we have not yet paid this amount right now. So whenever there is a liability generated for paying any expense, this is called outstanding expenses. Let's take an example of salary. For example, the salary for month of January is being generated. The worker has worked from 1st January to 31st of January, but we are not paying the salary on 31st of January itself. We pay the salary on the next month's 1st, 2nd or 3rd, something like this. So let's say salary of month of January was 30,000 rupees, but we are making the payment on February 5th. So if I write it on 31st of January, my accounts at that date, I am going to write this salary as outstanding salary. Why outstanding salary? Because the worker has worked throughout the month of January and now the salary is being due for him, but we are not paying because we have a system of paying him to the next month. Okay. That is why we are calling it outstanding. Similarly, there can be any other kind of expense. It can be rent, it can be any other expense of electricity bill, it can be the expense of interest, etc. All other expenses can be generated like this, and if the payment is happening on some later date, it will be called outstanding expense. Now the question arises, how are we going to deal it in accounting equation? So when we talk about accounting equation, we all know under accounting equation we have assets on one hand side and on the other hand side we have internal and external liability, that is our capital and liability. So this time what is happening, for example, I continue with the same example of salary being outstanding of 30,000 rupees. So no asset is going out or no asset is increasing or decreasing, we can say, because the cash payment is not done. Normally, if we talk about the expenses, how do we deal with the expenses which are just incurred and being paid, not outstanding? We deduct that amount from the asset, means from cash, and we deduct that amount from capital, because for expenses no separate column is open. Similarly, for incomes we add the amount in the cash column or bank column and we add the same amount in the capital. Here what are we going to do? We will keep one part of that expense as it is, as we were doing in case of expenses paid when it is incurred, but the second part is going to be different. So if salary is generated and being paid, what will be the treatment right now? Understand that. Suppose salary is being generated and paid also. So in that case, you are going to make the treatment like this. You are going to deduct 30,000 rupees from salary, cash, and you are going to deduct 30,000 rupees from here also. Okay, but in our example, salary is not yet paid, salary is outstanding. Outstanding means I cannot deduct it from cash. Then from capital, am I going to deduct? Yes, I am going to deduct it from capital. But we have studied that accounting equation will take into consideration each transaction at two places, because there are going to be two effects of each transaction. What about the second effect? The answer of this is that generate a new liability. Liability is what? Outstanding salary. This is for the first time we are going outstanding salary, or whatever is the name of expense, you will write outstanding expense account over here and generate a new liability. So here we are adding 30,000 rupees. Now my both the effects are completed, effect number 1 and effect number 2. So like this, the treatment for deducting it from the capital will remain same, but we cannot deduct it from asset. That is why we have opened another, liability, because it's a liability till the time we do not pay it off, and this liability is known as outstanding expense. I hope students you understood this. Let's take one more example. For example, we have rent outstanding rupees 10,000. Again, my asset side will remain unaffected, so I will not write anything over there. On the liability side, I am going to have two columns. One is capital and another one under liabilities outstanding expenses. So from capital I am deducting 10,000 since it is an expense and it will reduce owner's capital, and it will be added into the liability which is known as outstanding expenses. So like this, treatment of all the outstanding expenses is done. This is also a possibility that sometime you'll see a transaction like this. Let's take a blend of it. Let's say rent of rupees 5,000 paid and 5,000 is due. Due means it is yet outstanding. So how are you going to deal with it? So this time you have to be very careful. Asset will also be affected by this transaction, because here a part of transaction is in cash and another part of transaction is outstanding. So I am going to make my columns like this. From asset, I am going to deduct, which is my cash. I am going to deduct 5,000 rupees because rent of 5,000 rupees is being paid. And from capital, I am going to deduct whole 10,000 rupees. Why? Because the expense which is being incurred is 10,000. So the rule is that all the expense has to be reduced from the capital. So this is being reduced. But another 5,000, if I look at this particular point of time, my accounting equation will not tally, because at one point I am at one side I am deducting 5,000 and on another side I am deducting 10,000. So there is a difference of 5,000. This 5,000 will be added to outstanding expenses account. So now my accounting equation is tallying. On both the sides I am deducting 5,000 rupees. So this kind of transaction, where under one transaction only two different aspects are given, you have to practice, because these may create confusion. Now let us understand what is prepaid. Any kind of prepaid expense, prepaid, or which is known as paid in advance, means we have paid it before receiving the service or before buying the good or something like this. Advance payment is a asset. So whenever we are making advance payment, we will always consider it as an asset. So advance payments are asset, and one asset is increasing, which is your advance payment, and another asset, which is your cash or bank, that is reducing. So let's take an example. For example, rent paid in advance rupees 7,000. How are we going to deal with this? So if we have paid rent in advance, on the asset side we will have two sub columns. One is cash and another column is prepaid expense, or you can write prepaid rent also. Okay, so here we are going to deduct 7,000 from cash and we are going to add 7,000 into prepaid expenses. It is generation of liability, and this transaction will have no impact on the liability side. Here only it will nullify. Plus 7,000 and minus 7,000 is 0 and 0. Accounting equation is tallying. So always remember, whenever you make any payment in advance, that is your asset and it has to be recorded as an asset. Let's take one more example. For example, commission paid in advance. Commission paid in advance 300 rupees. So what are you going to do? Again, on the asset side, you will have cash and prepaid expense. And on the liability side, you have capital and liability. Below cash, I will deduct 300 rupees, and under prepaid expenses, I will add. Whereas on the capital and liability, it's not going to have any impact. So again, my accounting equation have an impact of 0 and 0. So the rule is, let us revise what we did with the outstanding expenses. With the outstanding expenses, we are creating a liability. So asset side will remain unaffected. In your capital, you are going to deduct the amount of outstanding expense, and you are going to create a new liability as outstanding expense and add it over there. When it comes to prepaid expenses, how are you going to deal? Under prepaid expenses, you are going to deduct it from cash because you have made the payment, and you are going to make another asset column which is known as prepaid expense column, and you're going to add it over there. At the time of prepaid expenses, your capital and liability column will remain unaffected. Now let's see one more thing which is related to this concept only. It is known as accrued income. Accrued income is just opposite of outstanding expense. Means if expense is outstanding, means which is being incurred, we have not yet paid, we call it outstanding. Similarly, if we have rendered any service and we owe the money, we are in receipt of money but we have not yet received, then it is called accrued income. What is accrued income? The nature of accrued income is also a kind of asset. Okay, this is known as asset. So if there is an accrued income, means which we were supposed to receive but we have not yet received, what will be the treatment for it in the accounting equation? So here in the accounting equation, the treatment is going to be like this. So since no cash is coming, so your cash will remain unaffected, but we will make a column of accrued income. Whatever is the name of this income may be discount, commission, or something else. So accrued income, whatever is accrued income will be added over here. Under capital also, since all the incomes and all the profits are added in the capital, it will be added under capital also. So at these two places, this accrued income is going to be added. Okay, let's take an example and understand. Let's say accrued commission. Rupees 500. If there is an accrued commission rupees 500, so you are going to add it over here, 500 rupees. You will make another column as accrued commission. And here under capital, you are going to add 500 rupees. Your liabilities will remain unaffected. Nothing is going to come over here. I hope you understood this accrued commission or accrued income also. So, and one more concept related to this is pre-received. What we had done earlier is paid in advance or prepaid. Now pre-received or received in advance. What is pre-received or received in advance? It has the same nature like outstanding expense, means it is a liability. You are not liable to receive it right now, but you have received it. So you will be considering it as a liability. For example, the rent is being paid in advance, some other commission discount is being paid in advance, discount is not possible, commission is being paid in advance, and interest is being paid in advance. So you have not yet rendered or you have not yet earned, but you have received it. So if you have not yet rendered and you have received it, it will be considered as your liability. How are you going to make the treatment for this? You are going to write it in cash. Whatever amount you have received, it will be added in cash, and you are going to make a liability which is known as received in advance. Take an example for this as well. For example, rent received in advance. Rent received in advance. Whenever you receive rent in advance, your asset side cash will be increasing. So let's say this amount is 5,000 rupees. So you will add it into cash. On the liability side, you will make one liability known as pre-received rent. Pre-received rent or rent received in advance. Pre-received rent 5,000. So your capital will remain unaffected, but you are generating a new liability. The simple reason is that you have not yet, rendered the service and you have received something in advance. So the nature of this income will become liability. So this is all for today, students. I hope you have understood these concepts and you are liking these videos. If you are liking the videos and you're coming back to our channel, please do not forget to subscribe the channel and share it with others as well. We will be meeting in the coming videos and we will complete this chapter. Soon after completing this accounting equation, we are going to start with the journal entries chapter, which is also going to be the very important chapter, not only for this year, for the coming years as well. Till then, bye. Have a great day.